So as we were saying, now from this low to this high, this is actually our major structure. So this is our trading range from the daily time frame. This is our trading range from the daily time frame. Now, if you now look closely to look at the minor structure, because you cannot say that you are expecting price to retrace down to discount before you start buying since December of 2020. So that means for 4 years, you're not doing anything. So, but if you look at the minor structure now, if you start looking at the minor structure, so what do you have with the minor structure? You have a high to a low, a high to a low, a high to a low, a high to a low. So this is how to like follow the structure. So this is a high to a low, a high to a low. So we have not seen any significant low being taken out. So that is why we say we still maintain our uptrend. Now, when this low, this small retracement, when this low was taken out, now, some people will start selling from here. They think we've changed character, especially if exactly. Because you see, that's the same thing I was talking about. So when we took out this high, now, and then we took out this high from here, we retrace, then we broke structure, and then so many people will believe this is a change of character, and they will start looking for sell around there. And like I explained the other time, that once price now take out this high, do not expect price to come back again to clear this low. Though this retracement is an incomplete pullback, because if we measure from the last low, this is our last low here. If we measure from this last low, to this high, if you plot our field, you see this first retracement is not up to the 50%. Now, if we take the second one, let me see if it's actually ahead. You see, this second one also is not up to the 50%. So this second, what is wrong with this thing? So this second one also is not up to the 50%. So these are 50% here. It's not up to 50% before we now have another break of structure. So normally, I will not be expecting this guy to retrace back to 50%. So anywhere I see an opportunity from this low, from this high to this low. So this is my trading range like this. Anywhere I see a buy opportunity, I will take my buy to continue the buy, to continue the trend. And so from this high, now this is not my new trading range. From this low to this high, now this is my 50%. So this is my 50%. You see, price came into that 50%. And what do we have inside that 50%? We have a fair value gap, number one confluence. We have this breaker block, number two confluence. So if you're a support and resistance trader, this is a resistance that is going to turn to support, number three confluence. So you can use both. That is why I said there is no strategy that does not work. It just depends on how you use them. So you can combine 2-3 strategies together and they will still give you the same result. So you can pick your buy and then continue the trend, right? So This is your high. This is your high to your low, your high to your low. And then you have your high to your low. Is this up to 50%? Okay, it actually tapped the 50%. It's tapped it. So it's a valid low. It's a valid low. Right. So this is a valid low. So this is our last low here. So the reason why I'm measuring it, if it is up to 50%, is for me to actually know if it is a valid low, if it is valid retracement. So I didn't be that this low is not up to the 50% of this range. I will not consider this my valid low. So once price take out this low, I can still look for, if I see an opportunity to buy, I can still buy to clear this high. But then this is my last low and it is a valid low. And then price went up and cleared this low. Once this low was taken out, I will believe that we are now in a downtrend. Then I will believe we are now in a downtrend, right? So from this high now, so this is our trading range now. From this high, now from this high now, we have not seen any major retracement. So this first retracement was not up to the 50%. This major retracement is not up to the 50%. So when did we have our 50% retracement? It was when price came here and then, so this is our 50% retracement on the major. So this is now becomes our major structure. Now, why is this our major structure? If you notice, this fall is actually a very massive drop. Not like this small push, small impulse correction. This is actually an impulse. And the reason why this is an impulse is because if you look at the structure from the downside, so if you look at the buy structure, you know that from this high to this low, we have not seen from this, this is one impulsive move on the major structure. This is one impulsive move because there was no serious retracement from there. This is one impulsive move. Now, this impulsive move again to the downside is actually another retracement of this up move. I'm not sure if you guys are getting me. So this is another retracement from this impulsive leg. So this impulsive leg here has actually taken a minor structure here. So taking a minor structure and we just see an impulse push to the downside. So now, if you now want to know where is the direction of the price, you now start looking at, okay, I have an impulse leg to the upside, impulse leg to the downside. So this particular leg now is favoring the what? It's favoring the buy side. So you'll be looking for, okay, price should come and take this high. So that is the logical explanation you can give it for the uptrend to favor the buyers. Now, if you are now looking at the sellers as well, because you must look at the two, so that you will not be blinded, say, with just looking for buys alone. Now, if you are looking for the two, for the sales as well, now you look for, okay, here is my last change of character on the minor structure. Here's my last change of character. Now, when price broke structure here, change character here, there has not been any major retracement to 50%. So this was the only place that we had our 50%. We have a retracement back into this 50%, right? Now, looking at another structure now, what can we see? We have this low to this high. I mean, this high to this low, then this high. Then we now took this low, which is telling us that, okay, this is actually a bearish market from here. And then what happened here? We broke structure, and not just one structure. We actually broke multiple structure. Took this high, took this high. So we actually broke multiple structure. So The next thing we want to pay attention to now is what? Is looking at this low now. Is this low going to hold? And I can tell you that because this low actually took out liquidity here, because this is like a change of a break of structure. People are looking for sales. People are looking for sales here. People are looking for sales here. So taking out many people, believe me, that this low, even if it is going to go, even if it is going to go, a rejection should happen around there. Even if it is going to be an inducement. So this is a daily time frame. If it were to be on the smaller time frame, you are going to see a small retracement. So it might be an inducement. Then we can take out that inducement. Then we can continue to sell. Right? So that is major structure. But looking at another minor structure now. So for a day trader, this is in fact for a day trader, you don't need all this big stuff, all this major. You see all this kind of movement. You don't need it. What you just need it as a day trader, you just zoom in. You just zoom into you look at the present structure. You don't need too much. You don't need too much structure. You look at the present structure. So as a day trader now, okay, if you are looking for around here now, you just wake up and you just if you want to look at your structure from the daily time frame, this is a high that was taken out. Then you can say, okay, after this high was taken out, the next thing you should be expecting is a retracement. The next thing you should be expecting is a retracement. And what do you now look at for? This is a fair value gap here. Price tap into that fair value gap. This was the last retracement. After price took out this high, we gave a retracement, we went up. So this low that was created here, this retracement was an inducement. We took out that low. After taking out, now if you now let's go to the 4 hours. This small low that you are seeing here now is a major change of character on the 4 hours. You see it. You see it. So the moment we took out this low, as a day trader, the next thing you'll be looking at for is what? A retracement back to anywhere around there. You can measure again from the high to the low. You mark out your 50%. Then you can start looking for your entry above this line. And what the next thing you should do is what? Above that 50% line, what can you see there? This is another block here, right there. A fair value gap, another block. Maybe on the smaller time frame, you can still see something else here. Then you can pick your sell. And when you pick your sell, where is your next target? You just mark out at least this is your first target here. First target, second target, all this low here. There's liquidity resting below them. Right? So you take your money. And you take your money. So if you take out this high again, you know that's okay. Retracements will happen, then to continue to the upside. So you don't need to like complicate structure for yourself that you are looking at weekly structure. You can, in fact, most of the time I don't even look at structure from the 4 hours. And in fact, you can, even if you look at your structure from the 15 minutes, especially if you're a day trader, even if you look at your structure from the 15 minutes, you still get something there. For instance, this is 15-minute structure. So this is low, this is high, this is low. Now, this low now is your break of structure. This is your break of structure, right? Now you mark out this high. Are we going to take this high, or we are going to respect it? Right? Now, that high now, from this low now, from this high to this low when we start the retracement, because I will not consider this a retracement. I will not consider this one a retracement. This is when the retracement started. So now this is my 50% of this of this whole leg. So above this 50%, I will now start looking for what? Start looking for institutional reference points. This is another block here. Fair lookup is attached to it. Then on the smaller time frame, if you see now, definitely on the smaller time frame, there's going to be like a change of character here. You can check that out as well. So on the smaller time frame, what is this? This is a change of character. When I have this change of character, then I will know that, okay, this eye is what I should be protecting. So if I take any cell, I should be protecting this eye. But mind you, this eye is not my protected eye from the time frame I'm checking my structure from. This is actually my protected eye from the time frame I'm checking my structure from. So I'm only using this particular time frame as my entry. So if I should pick a cell around anywhere here, I will not put my stop loss above this eye. I would rather put my stop loss above this one, above this particular one here. Then I can now target where? I can now target this one. This is my first target here. This low here is my first target. Target number one. Then I can start targeting all this low as well. And then target this last low as my last TP. And there you have it. So by just, you see, I'm not even going to 4 hours, 1 hour. You understand what I'm saying? I'm not going to bigger time frame to get this this setup now. So now, where is my last protected eye? Is this one. Just from 15-minute structure alone. Just from 15-minute structure alone. So the moment we took out this low, and then we now come back to take out this eye, right? Then I will know that, okay, now, according to this particular structure, I'll be looking for what? I'll be looking for buy. But where I will be careful is where? I'll be careful because I know that from this high now to this low, this particular retracement, this particular guy that I sold back here is actually below 50% of the first impulsive leg. So even if I am buying, well, what do I do? I will be careful once price gets to around this area because I know another sell can continue around here. So if I am buying, let's say for instance, okay, because look at it, this is an incomplete pullback. This first leg here is an incomplete pullback. And price came here and took it out. And like I said the other time, that once price take out liquidity, especially when we have an incomplete pullback, because look at it here now. This is it. After we took out this eye, let me measure it. After we took out this eye, this is the first retracement. So this is the first retracement. Now, is this retracement up to 50%? So this first retracement is not up to 50%. So this particular retracement is an incomplete pullback. So this low, price can come back to clear this low, right? Now, we now have the continuation, and then we have this, another retracement that is not up to 50%. And then what happened again? Price took that high again. Now, when price took this high, I know that this low right here is an incomplete pullback. So now, when price now take out this low, what is the price reaction? The moment we took out this low, price rejected immediately. Now, if you check out this structure from the smaller time frame, let's go to 5 minutes again. If you check out this structure from the smaller time frame, what can we see here? Price took out this incomplete pullback, which is our liquidity, then broke multiple structure. The highest structure here, took out the structure again here, So once price take out this structure now, what can you do? You start looking for buy, because now so I am no longer waiting for price to come to 50%. So because on the norms, this should around here now should be my 50%. So, but once price take out liquidity, it's just like what I explained the other time, that price, a vehicle that is going to Abuja and has 10 liters, and now the vehicle now, got to a place where there's a fueling station, and then he loaded the tank. So the vehicle does not need to go, far, does not need to like travel backward too much before you continue, because that is where this is where the price is going. The price is actually coming to take clear all this high, and then probably there's another liquidity here. So let's say this is the intention of the price. This is where the price is going. This is the destination. So price do not need to do what? Price do not need to come below too much before going. Once it has actually taken what it needed for the move. So in this scenario, what can you do? What can we use as our entry? Now, if you follow market structure, if you follow the market structure, what do we have here? We have a low to a high, a low, and then when we go to this high, what happened here? A little reaction, and then a fail. So can anybody tell me what happened here now? I've explained this thing this night. So I think I mentioned something like this. This reaction, before we took out this high, what is it called? Is anybody with me?
Inducement.
This is not inducement. This particular small low here, although it's also an inducement. It's also an inducement.
Incomplete.
No, this is a flip. This is a flip zone. It's a flip. So why is it a flip? Now, this low was taken out here. And then there's another block here. So what is happening here is that people are here selling. So the reason why I say it's also an inducement is because an inducement is actually, an inducement means when something is lying to you, when you are lying to somebody, when price is inducing you, price is faking you out, telling you that I'm going, and meanwhile it's actually not going. So this area now, and mind you, believe me, there will be people that will be selling from here. They want to sell from here. So when price now came here, reacted, and then failed. So when price now failed, this is a violation. This area now, this is a violation of market structure. So price will come back there, they claim this area, and then push up, which is exactly what happened here. Which is exactly what happened here. Another thing is, if you now measure from this high, from this low now to this high, it actually falls right below 50% again. Falls right below 50%. So this place now, you can actually pick your buy from here, put your stop loss below here to be safer. If you put it here, there is no guarantee that price cannot come down like this. Probably come to this other block. Come to this other block before going. So the most reasonable place to put stop loss will be below this low. And then what do? You can target the nearest drawn liquidity. If you want to target this one, this place here, you can target it 1 to 2. If you want to target another block, you might want to target this other block here. I want to target this other block 1 to 3. And if you target this liquidity here, this is 1 to 5. And if you want to use market structure as your exit strategy, because now you have gotten an entry here. If you want to continue to use market structure as your exit, you can just start marking out the market structure. So this is your high to your low to your high, or you can even mark this one because you're on a trade. So the moment you see this low being taken out, this particular low being taken out, then you can do what? You can close your trade upon the retracement back to maybe 50% of this range. You can close your trade around anywhere here like this. And then you are good. And then you are good. So now going forward, now what can I expect again? So apart from the higher time frame analysis that I did the other time for the dollar index, apart from the higher time frame analysis that I did, now I know that we have now taken out this highs here, which is a break of structure. So since we've taken out this high, now this is my minor structure here. On 15 minutes, this is my major structure. So we have just taken out a structure here. The next thing I will expect is what? Is a retracement back into the discount of this whole. So I was expecting a retracement back to anywhere here. So I will believe that what? All these lows here, they are what? They are just liquidity for price. I believe all these lows are liquidity. So going to Monday now, what I will expect is, I will expect price to give me a major retracement, right? I will expect price to give me a major retracement, but price may not do that. Price may not do that, but that is what I'll be expecting. So if I see a major retracement that cleared this low, not even that low, no. So if I see a retracement, a major retracement that do something like this, and then I can now continue to buy. I can continue to buy to where I have my, from the daily time frame. So I have my drawn liquidity. So from the daily time frame, this is my drawn liquidity. So since I have this on the daily time frame, which is my higher time frame, so when price now gets to this place, then I'll start looking for structure again to continue to sell. So that is why structure is very important. Like structure is king. If you know structure, you are good. If you know structure, you are good. That is why structure is very good. Because if you notice how price moves, it moves with structure. It moves with structure. It moves with structure. If you look at it here again now, a low to a high, a low to a high, and then we took out this high. So when we took out this high, what can we expect? We expect that, okay, retracement will happen, then we'll continue. Then we'll continue. Another thing is that when price take out two highs, when you have a low, high, low, high, low, high, low, and you have price taking out one high, two highs, then this low becomes your very strong low. Because price can take out just one high. If price take out one high, do not expect, especially on the smaller time frame. On the bigger time frame, this low might be safe. But on the smaller time frame, this low is not a strong low. Because price can do what? Can use this high as inducement, clear this low, and then continue to push down. And then continue to push down. And even on the buy side again, so price can do something like this, clear this high, and then continue to go. So in an uptrend, when you see price take out both lows and highs, knock and lots, look for a buy around there. And once price take out in a downtrend, price take out a high, and then come to take out a low again, then knock and lots. I think something like that happened on Euro AUD last 2 weeks. Where is that trade on? This was it. I was actually on this trade that day. So if you look at this structure now, this is a low, a high, a low, a high, a low, and then a high. And then we'll now take out the low again. So this is the same thing I was drawing the other time. So we took out in a downtrend, we took out the low, right? Then we took out the high, which means that what people are here buying. I was actually buying here too, right? I bought around there. It took me out, and then I flip it. After taking me out, then I now flip it. So this is how you can take a loss and immediately you take your money back. So you can now flip it and then you target the nearest ground liquidity. So, and if you notice, before that day ends again, this same thing that happened here. So this price action here now, this price action that happened here now, happened here again. It happened here again. Let me explain it. In a downtrend, we have what? We have this low to this high to this low, and then we have this high that was taken out. This high here was taken out. So the moment we have this, what is happening here? Buy opportunities. So I was not on this one, I didn't buy it. So now what happened here? People are trying to buy, and then price came down, and then do what? Took everybody out. Now, after taking everybody out, what do you expect that price will do? Price will come back up like this to reclaim that area because there's a valuation there. You claim this area, and then what? To continue to sell. This should be your target. To continue to sell. This is 1, 2, 3. All right. And if you notice now, this is the last high, and it was actually respected before price still did what? Still sold to clear this low again. After clearing this low, where is the last high? This was the last high. Price still came above 50% to premium and still did what? And still sold to clear this low. Just by following simple market structure, right? Price took out this low again. Where's our last high? This was our last high. Then price came up again, right? Now, here is what people will find very funny. When price took out this high now, some people now will be marking this place now as maybe a change of character or anything. And this is actually an internal structure. Here is it. When price is doing something like this, and then price do something like this, all this one now is just internal because this is your external from this high to this low. So this is your structure. Anything that happens inside this structure now, inside this range, this is your trading range. Anything that happens inside here is just internal. So you must still what? You must still do what? You must still maintain your bias. So it's just, okay, looking at this now, we just took out this high as liquidity, broke structure here. And then this is in fact, this is a nice setup. Don't look for buy around here. just look for buy around there and you attack this eye. So as well in a downtrend, if you have price doing something like this, and then you start having something like this, until we take out this eye here, until we take out this eye, we are still in a downtrend. All this one is just an internal structure. So that is the same thing that happened here. So when we took out this low now, so where is my trading range? From this high to this low is my trading range. So after taking out this low now, when we now have something like this, and then we took out this high again. So this is just an internal structure. Internal structure is all this one. So when we took out this high, and then we come back here to take out this low, and then we have not taken out this high. This is our target. This is where price is coming to. If not taking out this low, you can look for sell here. You can just look for sell around there. Because we have actually taken out liquidity and we've broken structure to the downside. We've broken structure to the downside. Right? So you can just look for the entry around there. The reason why I'm not paying attention to this upside is because I've seen price come into an institutional reference point as well here. Because looking at this structure here again, looking at the minor structure now, this is my low. This is a low to a high. Then we broke structure again. We broke structure to the, like we took liquidity to the downside, and then we took to the upside. So we continue to the up, continue to the up like this, right? And then this is the last low with that minor structure. This is the last low, and then this is the last high of the minor structure, right? Now price came into the premium of this minor structure and then broke structure to the downside. And then broke structure to the downside. So you can look for sell around here, protecting this high. Although this would have been your reasonable high to protect this particular one. Because this is still, all these ones, they are still your internal structure. So this would have been this guy now would have been the most reasonable high to protect. But because your stop loss will be too big, you can protect this high here. Protect this high. And then you target this low. So normally this should be your target. This particular low here should be your target. So, but that is why you can combine higher time frame structure to your structure. So you can have higher time frame draw on liquidity that you can target like this. And look at it. And since that time, look at how massive it actually drops. So that is all for tonight, guys. So probably next week we are going to have another class talking about more deeper stuff. All right.
All right. Thank you very much.
You're welcome. So thank you for tuning in today and have a blessed weekend.
My pleasure. Welcome. Thank you.
Yeah.
Thank you, sir.
Yeah.
Sir, hello?
Yeah.
Hello?
Hello, I'm with you.